Hello everyone. Good morning, good afternoon, good evening, depending upon when you are watching this video lecture. In the earlier sessions of income tax classes related to the chapter salaries, we discussed about some of the basic aspects and concepts of salaries. Most importantly, the definition of salary under section 17(1) and charging section, which is section 15. Also some of the aspects like what is tax-free salary and how to calculate graded pay scale. All these basic aspects we discussed in the earlier sessions, and after that we also understood that this chapter can be broadly classified into three segments. One of them is allowances, other one is perquisites, other one is retirement benefits. Let us start with the retirement benefits. These retirement benefits also mostly focus on how much exemption is granted for any type of retirement benefit that is received by the employee naturally after the retirement. Here the certain words have to be understood very clearly. As far as Income Tax Act is concerned, we don't bother whether the retirement is because of superannuation or because of any other reason where the employee has left the organization. That doesn't matter to us at all for Income Tax Act purposes, because the word retirement here should not be taken in our normal context where we use in the real world. Here retirement means simply employee leaving the organization, that's all. Why is he leaving? What is the purpose? Is he leaving on his own, or was he kicked out? All these things do not matter. What matters is employee is leaving the organization. So when you say retirement here in this particular segment, don't think it is only a retirement after a certain age. There is a word for it. When an employee retires from his employment after attaining a particular age, that is called as superannuation. That word also has to be remembered. Superannuation means retirement because of age. Normally this happens in government services. Say for example, some of the government officials, state government officials will get retirement age which has been now fixed at 58. So once somebody has 58 years of age, then they will retire. In some jobs it may be 60 years. For some jobs it may be 65 years, like judges and all. Like that many ages can be fixed for the government job positions, where according to their age they have to retire after reaching that age. That is called superannuation. What we popularly call as retirement in general life, that is actually called as technically superannuation. Superannuation is nothing but retirement because of age. But retirement is not always superannuation, not necessarily. That is a point we need to remember. Retirement not necessarily is superannuation. It can be sometime in the middle of the service also. Suddenly employee got bored of doing the job and he can resign and leave the organization. Doesn't matter. You don't need to give names to that. Okay, if he leaves, it is resignation. If the employer kicks him out, that can be called firing. Or if he retires only by age, we call it retirement. No, these are all common words, normally common people use. But technically, we don't differentiate between resignation, retirement, superannuation. All of them are similar, one and the same. When we use the word retirement here, all of them will fall under the purview of that word, not just superannuation. That point has to be always kept in mind. But we don't worry about the purpose or reason of retirement. What is our concern here is what the employee is receiving after the retirement. That's what we are concerned about, and how is it taxable. That's what it means. That's what it is, our prime concern here in this segment. So there is no segment in the Income Tax Act called retirement benefits. There are sections in the Income Tax Act. We are all putting them in one place for our convenience so that we can learn all of them at one place. Other than that, there is no particular segmentation like this in the Income Tax Act. Income Tax Act will only have provisions. We segregate them. We put all the provisions related to allowances in one segment so that we can learn them at one place. Same way we are putting major things which are all related to the retirement benefits in one segment, and we will learn all of them one by one. There is no sequence here, but as far as learning is concerned, each provision is a provision. We should just know the provision, that's all, whatever that section number may be. We are talking about annuity or pension. Usually that's what is given after the retirement. Particularly, somebody receives a pension or annuity, whatever the name it is called. We don't need to go into the names and the definitions of what is annuity and what is pension and all that. We just need to know what is the tax treatment of that, right? So basically, annuity generally is a word that is used for periodicity, that's all. Any amount that is received or paid periodically, we can call that as annuity. That is the general meaning of the word. But here we don't distinguish between annuity and pension. Both are same for us. So we don't care about what word is used, whether annuity is the word used or pension is the word used, doesn't matter. Essence matters. What is essence? Essence is when normally when the employee receives pension after the retirement from employer, what is the treatment? Definitely it is to be taxed as salary. That's all. That's all. And does it matter whether this annuity or pension payment is a contractual obligation of employer or voluntarily employer is paying? It doesn't matter. How does it matter? So any payment, by the way, by the employer to the employee can be contractual also, voluntary also. So Income Tax Act does not distinguish between contractual payments and voluntary payments by employer. Whatever the money that employee receives in the form of pension after the retirement is taxable. Even if it is received from a past employer also it is taxable. Even if it is received from a present employer also it is taxable. It is always taxable. So it is taxable, simply speaking. If it is received from a person other than employer, then it will be taxable under income from other sources. For example, family pension. Family pension received by whom? Received by the family of a deceased employee from the employer of the deceased employee. So, who is paying is employer, but who is receiving is not employee of that employer. That is the family of the employee who already died earlier. That is called family pension, simply. And that can be taxable under income from other sources. This already we discussed, and we will discuss once again in the chapter of income from other sources also. But simply speaking, these entire points are all telling us only one thing, because annuity or pension is taxable. That's all. For that one word, all those details are given. And other things, irrespective of whether it is received from present employer or past employer, irrespective of whether it is contractual or voluntary, still it is taxable. That's it. That is the core point related to pension. We don't need Oxford Dictionary definitions. Everybody can understand the word pension. Simply what? That is a periodic payment paid by the employer to the employee after retirement. Simple. That's what is pension. Now comes the real income tax treatment and what the classification of pension has to be done as. This is important for us. The pension can be broadly classified for income tax purposes into two categories: commuted and uncommuted. Here the commute, uncommute is not about traveling. That commutation is different. This commutation is different. Commuted and uncommuted are the two categories of pension we can classify. Uncommuted pension is basically the pension that is received periodically. See, normally when nothing is mentioned, if we say that so and so person is receiving a pension of 10,000 rupees per month, what kind of pension that is? That is uncommuted pension, which is received periodically, and as we just discussed, it is fully taxable in the hands of all types of employees, whether government or non-government. All employees, for everybody, that means uncommuted pension is always taxable. That is the periodic payment that is received by the employee from the employer after the retirement. That is what normally pension means. In other words, if nothing is mentioned, just the word pension always indicates it is uncommuted pension. Then the question comes, what is this commuted pension? This is a special case. Commutation here means interchange, which means the commuted pension is the lump sum amount taken by the employee from the employer by commuting the whole or part of the pension. In other words, in lieu of a portion of the pension that employee might receive in future, now he is telling the employer, I will exchange that periodic payment with a lump sum payment now. Let us say if the employee is supposed to receive, say, 10,000 rupees of pension after the retirement, employee might have an option to say that, naturally to say to his employer that, boss, I will commute 70% of my pension. I will commute it. So if he commutes the 70% of the pension, that means in future he will not receive 10,000 rupees. He will receive only 30% of 10,000 rupees. That means 3,000 rupees only he will receive in future as monthly pension. Because he has interchanged the 70% of pension for a lump sum payment. So the 70% commutation happened for a lump sum amount. Lump sum amount is going to be given for this 70%. But in future, once again, the periodic amount is going to be given, remaining, that is 30% of 10,000, 3,000 rupees. So in future, instead of 10,000, he will receive 3,000. In lieu of this, instead of this 70%, which is commuted, he will get a lump sum amount. That is a point here to be noted. And how much is that lump sum amount, that you and I cannot decide. That will be given in the question. That is a fact. Whatever the employer gives to employee, that is the lump sum amount. That we cannot determine. It should be given. That is a fact. But what we can definitely determine, if normally the pension of a person is 10,000 rupees per month, if 70% is commuted means, remaining 30% will be still given as uncommuted pension, in which case it is 3,000 rupees per month periodically in future. After the action of commutation happened, in future the employee will receive the uncommuted pension for the remaining portion only. If at all he has commuted whole of the pension, which generally will not happen. If at all, just for understanding purposes, if at all the employee has commuted whole of the pension, if that happened, then in future the employee will not receive any uncommuted pension, because he has agreed to sacrifice 100% of his pension. So sacrifice, once again, is not that he is doing a favor or something, but he is exchanging a whole or part of the pension for a lump sum payment to be received immediately after the retirement, rather than receiving a periodic payment in future. That's what is commuted pension. This option will be given to some employees by the employers. In fact, for many government employees, it is not an option, it is compulsory. They have to commute. They have to commute a percentage. Minimum percentage they will decide, the employer will decide. Employee can commute a higher percentage also, but that is all none of our business. Our point is, in the problem, whatever is given to us, in the case, whatever we are dealing with, how much is the normal periodic pension, we should identify. How much is the percentage of commutation, we should identify. How much is taken as a lump sum amount for such commutation, that will be given in the question. And we should calculate, after a commutation of certain percentage, how much the employee might receive in future as uncommuted pension, that we should calculate. Of course, we also should definitely already know that the uncommuted pension is fully taxable. So this 3,000 rupees here, whatever we are talking about, that 3,000 rupees is fully taxable. That is uncommuted pension. There is no discussion on that required. It is taxable, that's all. But now what are we discussing here is, what about this lump sum payment? Will that also be fully taxable? Answer is no. there is a bit of exemption that is given to such lump sum payment. How much is that? Is the main point related to pension what we are talking about now. So first understand this process of commutation. If at all any employee converts their future right to receive the pension into a lump sum amount which is receivable immediately, that's what is called as commutation. So they are foregoing their future right to receive the periodic pension, and instead of that they are receiving a lump sum payment now immediately. That process is called commutation. Usually it will not be whole of the pension, usually a part of the pension will be only commuted. How much percentage of commutation is commuted? How much percentage of the pension is commuted? That will be rewarded with a lump sum payment. Remaining amount which is uncommuted will be still received in future as a periodic payment. That is fully taxable, so the discussion does not require any particular attention on uncommuted pension. It is simply taxable for everybody. That's it. Now, some example is given, the same like what we have taken. Suppose a person is entitled to receive a pension of say 2000 rupees per month, and if he says that I'll commute 1/4 of this, which means 25% of this, for 30,000. Don't enter into how 30,000 we got. That is none of our business. That is what employer gave him. Why he got 30,000 for this 25%? Nobody can answer. That is none of our business, and we don't know that. He got, that's all. He got 30,000 for this 25%. That is a fact. This is not something that is decided by us. Please understand. Just because there are numbers, don't be under a wrong impression that we can calculate anything. No. We are not calculating this 30,000. It is a fact which is already there. But what we should identify from our side, this employee has got 30,000 rupees lump sum amount in lieu of 25% of his pension. So he has sacrificed 25% of his pension, which we are calling as commuted pension. In other words, he has commuted 25% of his pension, and he got 30,000 rupees towards that commutation. So what can we call this 30,000 rupees as? That is what is commuted pension. When we say commuted pension, that's what we are referring here. So how much is the commuted pension in this case? 30,000 rupees. Is it per month, per annum something? No, it is lump sum payment, one shot payment. So 30,000 rupees, that's it. He received lump sum upon retirement. That is commuted pension. Now the question comes, how much would be the uncommuted pension? Because he has commuted 25%, 75% will be uncommuted pension. 75% of 2000 will be 1500 rupees per month. What is the tax treatment of that? Fully taxable. Is there anything else to understand there? Nothing. Fully taxable, fully taxable. So uncommuted pension 1500 per month, fully taxable for that person. Question about this 30,000 will be coming definitely. Whether it is taxable or not depends upon the exemption that has been granted in section 1010A. Should remember this section number 1010A. That is a section, capital A that is. So according to 1010A, there is some exemption that is given for commuted pension only. Only commuted pension. For uncommuted pension, there is no exemption, it is fully taxable. So according to 1010A, any payment in respect of the commuted pension is exempt, subject to the conditions specified. And how much is that exemption? Let us look at them one by one. Here also there are different categories of employees. According to their category, exemption will be granted under section 1010A. What are those categories? First category of employees is this. Just remember that list. Just list remembering is enough, because we are not going to calculate anything, because for all of them, commuted pension is fully exempt from tax. Nothing is taxable for these type of people. Who are those people? Employees of central government, employees of local authorities, statutory corporations, members of the civil service or defense service. Simply speaking, government employees, including the employees of central government or even state government also, and local authorities also. State government is missing here. Any government employee actually, central, state governments, local authorities, statutory corporations. Statutory corporations means which are established by statute, something like let us say Life Insurance Corporation of India, like that. Statutory corporations. Same way, members of civil services and defense services, anyway, who will be central government employees. So I think in this list, the state government is missing, but it is also there. See, when the employees of local authorities are also exempted, it would be unfair to even imagine that employees of state government will be taxable. No. Central government, state government, local authorities. There are three layers of government in this country. We already should know that. All government employees in all the three layers, their commuted pension is fully exempt. That's it. In addition to the all three layers of government employees, employees of statutory corporations are also, if they receive any commuted pension, that is fully exempt. That is very clearly given here. That is exemption under section 1010A. Is there anything for us to calculate there? Nothing. So all that we need to know is list of the people. Who are those people for whom the commuted pension is fully exempt? That list only we should remember. That's it. Then what about other employees? Other employees means other than those which are covered already by A point. For them, the commuted pension is exempt but not fully. We need to calculate that exemption. Again, we classify those employees into two categories here. Employees in receipt of gratuity, employees is not in receipt of gratuity. In other words, we have to check whether the employee has received the gratuity or not. How do we know, sir? Of course, it should be given in the question, sir. We have to identify that from the question. Employee has received gratuity or not. If he received gratuity, it is given in the question that somewhere employee has received the gratuity. Then how much exemption can be granted under section 1010A for commuted pension is to be calculated by using this formula. That is 1/3 of the amount of the pension which he would have received had he commuted the whole of the pension. This is what the law said. Exemption amount is how much? 1/3 of the amount of pension which he would have received. Would have means not really received. Would have received had he commuted the whole of the pension. Had he means if at all he commuted whole of the pension. But he did not commute whole of the pension. He commuted only some portion of the pension. So how much has to be given as exemption is, first we have to convert commuted pension, how much ever is received, into 100 divided by the percentage of commutation. In other words, for example, in this case, this guy got 30,000 rupees as a commuted pension in exchange for how much? 25%. So if 30,000 is representing 25%, how much would have been 100%? That is the point here. How much pension he would have received had he commuted whole of the pension. Had he commuted whole of the pension, how much he would have received? It should be 1,20,000, because this is 25% representing 1/4 pension only is 30,000. That means how whole of the pension, if he commuted, we are not talking about he really did commute. We are talking about had he commuted. If he commuted whole of the pension, how much he would have received? That is how much? 1,20,000. How do we get it? 30,000 into 100 by 25. That's what is the formula here. Commuted pension received 30,000 into 100 divided by percentage of commutation 25. Into 1/3 only is exempt, not the entire amount. So in this case, 30,000, if at all this guy is in receipt of gratuity, how much would be maximum amount of exemption is 30,000 into 100 by 25, which comes to 1,20,000 into 1/3. 1,20,000 into 1/3 means 40,000. So can you get a 40,000 exemption when you received only 30,000? Not possible. That means it is restricted to 30,000. Is there any commuted pension that is taxable in this particular case? Answer is no. Nothing is taxable. So whatever the commuted pension received into 100 divided by commutation into 1/3 of that will be given as exemption maximum if the employee is in receipt of gratuity. If at all the employee did not receive any gratuity, imagine if in the same case also if the employee did not receive any gratuity. Once again same, 30,000 into 100 by 25, which comes to 1,20,000 divided by 2. Instead of 1/3 we'll take half here. Remaining thing is same. So how much will be exemption in this case? Half of the amount of pension which he would have received had he commuted whole of the pension. Had he means if he. If at all he commuted whole of the pension, how much pension he would have received, commuted pension, if he commuted the 100% of it. That we should first calculate. Half of that is given as exemption. In this case, if the employee did not receive any gratuity. If he received gratuity, 1/3 of that will be given as exemption. If the employee did not receive gratuity, half of that will be given as exemption, and naturally only one of them will apply. Same employee cannot have both the categories, not possible. And by the way, if that employee is a government employee or employee of any statutory corporation, anyway it is fully exempt commuted pension, so there is no calculation involved. Like this, first we should understand what is commutation and what is uncommuted pension. Uncommuted pension is fully taxable. Commuted pension is exempt depending upon the status of employee. If government employee or statutory corporation employee, then commuted pension is also fully exempt. But if in case of other employees, commuted pension is exempt, either 1/3 or a half, depending upon what? Depending upon whether the employee was in receipt of gratuity or not. If the employee received the gratuity, exemption amount is little lesser. Only 1/3 is given as exemption. And if the employee did not receive gratuity, exemption amount is little higher. Little bit of more relaxation is given. Little bit of more mercy is shown on the employee who did not receive any gratuity, because half is more than 1/3. That we should know. So exemption is more for employees who did not receive gratuity. Exemption is little less for employees who received gratuity. So if they already received gratuity, 1/3. If they did not receive gratuity, half. But 1/3 or half of what? 1/3 or half of commuted pension, how much they would have received had they commuted whole of the pension. You need to remember the sentence also. If you want to just apply the formula, you can remember the formula also. 1/3 or half into commuted pension into 100 divided by percentage of commutation. That's what is formula for exemption of commuted pension for non-government employees under section 10(10)(a). That's it. That is about commuted pension. Of course, the judges of Supreme Court, High Court will be entitled to exemption of commuted portion. They are already exempted for many things. They are exempted for anything. And any commuted pension received by an individual out of an annuity plan of LIC from a fund set up by that corporation will also be exempted. So if the amount is not received from an employer, rather if it is received from life insurance corporation according to any annuity plan, that is also exempt. So that is not actually forming part of this particular chapter, so we don't need to worry about that. Normally, a pension received from employer is our general focus area in this chapter. These all provisions, whatever we discussed, are already summarized here. Pension, which is classified into two categories. One is commuted, one is uncommuted. Uncommuted is fully taxable, so there is no need of further discussion. What if it is commuted? Then we have to check what is the nature of employee. Are they related to central government, state government, local authority, statutory corporation, etc.? If so, then the pension, the commuted pension, what they received is fully exempt under section 10(10)(a). Further subclauses and all not required. 10(10)(a) is enough. In case of other employees, then once again you have to check whether the employee is in receipt of gratuity or not in receipt of gratuity. If the employee is in receipt of gratuity, 1/3 of the commuted pension into 100 by percentage of commutation. If the employee did not receive gratuity, then half of the commuted pension into 100 divided by percentage of commutation. That will be exempt under section 10(10)(a). That is the exemption related to pension, commuted as well as uncommuted. Now let us look at one of the questions related to this for understanding purposes. Mr. Sagar retired on 1/10/2019, receiving 5,000 rupees per month as pension. This is normally his pension, and he retired. Date is important here, on 1/10/2019. And on 1/2/2020, there is a time gap here, October, November, December, January. After 4 months, he has commuted 60% of his pension and received 3 lakhs rupees. 3 lakhs rupees. How 3 lakhs? That we don't know. That is there we headache. But he received 3 lakhs rupees, that we know. Against how much? Against 60% of his pension that is commuted. You are required to compute his taxable pension assuming he is a government employee, assuming he is a private sector employee, Receiving gratuity, whatever amount is that we don't care. Whether he received gratuity or not, enough. How much gratuity he received, that has nothing to do with pension exemption. So we have to just look at how much gratuity received is not material. We have to just look at whether the employee has received gratuity or not, or if he is not in receipt of gratuity or not. Exactly, our eyes should go to the correct words. Unnecessary things. 5 lakhs rupees he received. What should we do with that? We'll do whatever we require to do with that in gratuity segment, not pension segment. We should not mix the things up. And what is asked here? Taxable pension. Why should we worry about 5 lakhs gratuity received, something else received, something else received? We don't care. We only have to focus on pension when the question is about pension. So how much is taxable pension is asking. If he is a government employee, how much is asking. If he is a private sector employee, how much is asking. And also if he is private sector employee receiving gratuity or not in receipt of gratuity also is asking. See, first and foremost point, for all the three categories, you can even do it like a table also, like a separate statement also, that is your choice. The presentation can be done in different ways, but ultimate answer should be same. For example, if this person is a government employee, for a government employee, first of all, the 3 lakhs rupees of commuted pension that he received is exempt, that we know under section 1010A. Commuted pension for government employee is exempt, so that 3 lakhs rupees is not at all taxable. But uncommuted pension is definitely taxable, right? Uncommuted pension is taxable. So how much is that uncommuted pension for this person, that we should calculate? How? First of all, we should be careful with the dates and amounts. He retired on 1/10/2019 and normally he receives 5,000 rupees per month as pension. And when he commuted is February 2020, 1st February. So October, November, December and January, 4 months he has received. 4 months, how much he has received? 5,000 rupees per month he has received. So 4 into 5,000, that is 20,000. Plus, after that also you cannot just leave it. There is a still uncommuted pension. For which months? February and March. For February and March, 2 months, he would have received 40% of uncommuted pension. How do we know 40%? Because he has commuted 60%, uncommuted is 40%. So 40% of 5,000 rupees will be 2,000 rupees. So for 2 months, it will be 2,000 rupees. So in other words, how much is this going to be? 4 into 5,000, 20,000, plus 2 into 2,000, 4,000. So 24,000 rupees will be taxable. Actually, for everybody, whether it is government or first case, second case, third case, in all cases, the uncommuted pension is going to be same, right? Because the case is same. 24,000 rupees is going to be taxable for first case, definitely yes. That is government employee. That's what is given here. That is 24,000 rupees. Okay. That is first case. What about this 3 lakhs, sir? That is fully exempt. So total taxable pension for first case government employee is only 24,000 rupees. That's it. That is first case, let us say. What about second case? Second case also this 24,000 is taxable. That is for sure. But out of this 3 lakhs that he has received as commuted pension, some amount will be exempt. And the question comes, how much will be exempt? How much will be exempt in this case where the employee is in receipt of gratuity? The employee is in receipt of gratuity. Formula directly you can calculate. How much is the commuted pension that he has received? 3 lakhs rupees is the commuted pension that he has received. Yes. So when he has received gratuity, how much will be exempt? Only 1/3 will be exempt. So 1/3 of 3 lakhs commuted pension into 100 divided by 60. 100 divided by 60. Do it on calculator, then you will get the exemption. Do it separately. 3 lakhs into 1/3 into 100 by 60. How much is the exemption? 1,66,667 rupees is the exemption, isn't it? 1,66,667 rupees is the exemption. That means how much is taxable? If this is exemption, 1,66,667 is exemption, means how much will be taxable? 3 lakhs minus 1,66,667, which comes to 1,33,333. That is taxable commuted pension for the second case where the employee has already received gratuity. How much he received gratuity, that we don't care, but he received gratuity means his exemption under 1010A will be only 1/3 of commuted pension, which is 3 lakhs, into 100 divided by percentage of commutation. So 100 by 60. And you have to also remember text also. Had he commuted whole of the pension, he has received 3 lakhs rupees because he commuted 60% of the pension. How much he would have received, if he commuted 100% of the pension, he would have received 5 lakhs. In that, 1/3 only is given as exemption. That means 1,66,667 is given as exemption, which means how much is taxable? 1,33,333. But don't forget the uncommuted pension, that is also taxable, right? Plus 24,000, which comes to total 1,33,333 plus 24,000. That comes to total taxable pension. How much in this case? 1,57,333. That is a taxable pension for second case. 157,333. That is a final answer. That is the final answer for second case where the employee has commuted 60% of his pension for 3 lakhs rupees, but is also in receipt of gratuity, and because of section 1010A exemption restricted only to this amount, that is 1,66,667. Remaining amount is taxable. Uncommuted pension is always taxable, that is 24,000, which we already calculated. You don't need to show the calculation every time. We already know that 24,000. Take it directly here in point number B. Now, for point number C, what happens here? Only just change happens. So in point number C, only instead of 1/3, there will be half. Just change that. Point number C. Half of commuted pension, had he commuted whole of the pension. How much amount will this be then? That will be 2,50,000, isn't it? Because 3 lakhs into 100 by 60, 5 lakhs we already got. 5 lakhs by 2, 3 lakhs. 5 lakhs by 2 is 2,50,000. So 2,50,000 is the exemption under 1010A. If 3 lakhs is received and 2,50,000 is exempt, naturally how much will be taxable in this case? 50,000 will be taxable. So if 50,000 plus 24,000 already anyway taxable for everybody. So how much is the final taxable pension for this person? 74,000. If this private sector employee is not in receipt of gratuity. That is the final answer here naturally. That will be how much? 74,000. Like this, for any case, we should be able to calculate how much is the exemption in relation to the commuted pension received by the employee under 1010A. So 1010A is giving exemption for commutation of pension. And we should also be careful about uncommuted pension. Without forgetting it, always it becomes taxable. Always. So irrespective of the nature of employee, always this 24,000 would be taxable. Whereas uncommuted pension is exempt depending upon the nature of employee. For government employees, it is exempt. For a private employees who is in receipt of gratuity, it is 1/3. For private employees who are not in receipt of gratuity, it is half. Of what? Half of commuted pension into 100 by percentage of commutation. But at the same time, I would like to draw your attention. Don't expect percentage of commutation in all questions. Let us say if he tells he has received 1 lakh rupees for commuting 1/3 of the pension, then you cannot search for percentage. Where is percentage? It is not given at all. Should be able to do percentages and fractions according to the question that is given. If 1 lakh is received for 1/3, how much would have been received if he commuted 100%? If 1/3 is representing 1/3, 1 lakh is representing 1/3, how much would have been received for full pension commuted? 3 lakhs. That is how we should do. For example, if he gives that somebody has received 5 lakhs rupees as commuted pension which is representing, say, two-third of it. Two-third only he has commuted. Two-third he has commuted, against which he has received 5 lakhs rupees. Then you cannot search percentages. Then you have to calculate 5 lakhs into, because this is representing two-third, how much would have been the full pension? Into 3 by 2. That means it would have been 7,50,000. On that, one-third or half depends upon whether employee received gratuity or not. So calculating this part of commuted pension, if the employee had commuted whole of the pension, is important. Once that is done, one-third or half is not a big deal. That can be done according to the nature of employment and according to whether the employee has received gratuity or not. That is about section 10(10)(a).